me now. Okay. I've been literally for 7 minutes. I've been talking. I've been talking for 7 minutes and I'm getting zero response. And then I see the, yeah, so am I. Nobody's writing any messages. I'm like, guys, this is going to be really short today, you know, because it's a Q&A and without any Q's, it's hard to give any A's. So anyway, I've said hi to everybody in here. So hello, everybody. I'm not going to go through everybody again, but okay, there we go. There we go. All right. So what we're going to do is we're going to go back to sharing the screen rather. And Big Guy Slim, what's up? We've got some folks in here that are not typically in the 920 room during the day. So welcome to all the people that are typically not in the 920 room. I am P Daddy. Most of you guys know me. Been around for a minute. It's fate. It is absolutely fate. I am talking now, Crash Dog. How you doing there, my friend? One Flacco for you. Okay, so here's what we're going to do today, folks. It's a Q&A. So that's what we're going to do. It's question and answer. Now, if you guys would like to jump on here and do the questions live without just writing them down, thank you, Double C. I appreciate that. And thank you for the very kind message on Facebook. Thank you so much. I appreciate that. If you guys do not have the newsletter, head on over to 920trading.com and you can sign up for it. But anybody who would like to jump on here, and we can do it either way, folks. We can either do it, you can jump on here and we can have a little discussion about it, or you can just put your questions here. Either way you guys want to do it. If you're you know, a little bit anxious on the mic, which you shouldn't be. We're just among friends. Question, can you please review price action for me? Okay, like what makes one decide to choose to enter a trade over? Okay. All right. So let's talk about that real quick. So let us go. Okay. We're going to bring up a 30-minute chart. How about that? So here is what are going to be the determining factors. First thing we're going to do this, JL, first thing in the morning before we ever get started, we're going to look at 30-minute zones. And you can look at 15-minute zones. I prefer 30 because generally speaking, the higher the time frame, the stronger the level. So what I'm looking for is I'm looking for double tops on 30-minute, and we can call those supply zones up top, and we can look at double bottoms on 30s, and we can call those demand zones down below. Now, the only problem with right now, if I did these over here is, or did pre-market like I would do on Friday, is they've already played out. So we'd have an absolute bias knowing how everything played out. So essentially everything starts, the determination starts when we're setting up the chart. So it starts in pre-market, to know exactly where those levels are. So you can see that I'm looking at all of my 30-minute double tops and double bottoms. And in doing so, again, those will give me different levels of strong areas of support and resistance from a higher time frame. So this is what it looks like on the 30-minute. And again, this is Friday's print. So if we look back at it, what we will see is, and again, these are Fridays, so I tell you what, let's do this. Let's do this instead. Let's go back and let's set up Friday pre-market chart. Okay, so we're going to look at Thursday. So look at Thursday. So what we're going to do, coming into Friday, is first thing we're going to do is we're going to look at, again, 30-minute zones from pre-market. So I've got this 30-minute triple bottom down here. Okay, so I'm going to label that as a line. I know I've got this double top on the 30-minute right here, so that is a line also. Then I'm going to go back to Thursday and see what I have for those same 30-minute zones. So I'm just going to start marking these up. Now, generally what I do is I am looking for confluence, like to see confluence throughout the day. Now, you can use 30-minute zones, you can use 15-minite zones, and again, the higher the time frame, the stronger the level. Let's see, what am I missing in here from a 30-minute zone? Well, this is the opening print here, opening 30-minute print yesterday morning. Now, let's go back and look at 15-minute zones during that same time period. So again, what do we see? Another thing I'm going to do is I'm going to look at pre-market low. I'm also going to look at pre-market high. So I've got pre-market low. I've got pre-market high. So all of these things I'm kind of laying out. And then I've got this 15-minute double bottom over here, but it's really, really close to this area right here, this 30-minute. So we're just going to go back to that one minute right in here. Now, yesterday, we didn't have anything. We didn't have any historical context to the left. Bodies only. I'm only looking for bodies. There's obviously information in the wicks, but I'm only looking for bodies. That's just my style. That's just my style. Now, again, yesterday, folks, what we had yesterday, we were all-time high, so we didn't have any historical context. We couldn't look left and find anything. So what I did is I pulled out pivot points. So I'm looking for pivot points high. Not really concerned about pivot points low. So I'm looking at pivot points in here. This was one of our lines yesterday. I'm going to put another pivot point up here, which we never got up to this line up there. We never got there. Turn these pivot points off again, kind of clean it up just a little bit. So the question is, where do we put on a trade? Where do we not put on a trade? Or where do we decide to put on the trade? Pre-market, you use all data or just 7. I'm looking at the entire pre-market, giving weight. I'm obviously going to give weight to the most recent pre-market. Yeah, I'm not recording this, Mike. I probably should have recorded it, but I didn't press the record button. But we can do this again one morning, or we can even do this one-on-one. So for the folks that are not able to do the whole thing, I do one-on-ones. Okay, you're recording. Okay, sounds good. Perfect. Yeah, I'll upload it. Just send me a link. Very, very good. So I give more weight, particularly if there's a report coming out. So typically we get reports that come out at about 8:30. So I will give more weight to those. So anything around 8:30, somewhere right around in there. And again, particularly since we had a report coming out. I don't know that we had anything. We had a little bit yesterday, but we had several reports that came out this last week. So here's what I'm looking for. What I'm looking for is when I look at calls, generally speaking, what I'm looking for on calls, and this makes it really, really simple. I'm looking to get through a major level, because remember, folks, the higher the time frame, the stronger the level, and we can all agree on that. A 30-minute zone, generally speaking, is going to be stronger than a 5-minute zone, or a 2-minute, or a 3-minute, or a 1-minute zone. 1-minute candles, folks, are heart attack candles. And I was actually having a real quick conversation with Fabaro about this just a couple of days ago, and we both agree. And a lot of people agree. I mean, you can use 1-minute candles, that's fine. Yo, what's up, Fabaro? I saw you in here. That's why I had to call you out. And I'll get your question here in just a second. So what we are looking for on calls, we want to get across to the upside, okay? We want to cross to the upside, and we want to be directly, what's up, Sing? We want to be directly above a major zone, okay? So we're going to be able to use that major zone as support. So, and I can speak directly about this one because yesterday I was in on calls right here. So what we had essentially yesterday, and again, we're coming out of a major zone. That's a 30-minute zone right here. All of these lines, with the exception of this line right here and this line right here, these are pivot points. But all of these are major 30-minute zones, with the exception of this one, because this is pre-market high and this is pre-market low. They're all major levels. Okay, so the reason why we want to use major levels, and you can use 15-minute zones, you can use hour zones, you can use 4-hour zones. Typically more pullbacks on 4-hour zones though. But I am a big fan of the 30-minute supply zone up top and demand zone down low. So again, I took this call yesterday morning, number one, because this was pretty much a golden cross, what I call a golden cross. So we crossed the 9, the 20, the VWAP, and the POC all on the same candle. So I went in here. Again, we're directly above a major zone right here. We're also above VWAP, which obviously is considered a major zone. So when you get a play like that, when all of those things happen at the same time, put on the play. So it's essentially the same thing to the downside. I got trapped in calls in here yesterday. Lost money on this trade, but it's the same thing to the downside. We're going to use this pivot point as a major zone. So we get the cross to the downside. And again, I stopped out here. I put on puts on this candle right here. So again, across to the downside and a breach of a major zone. And then you just follow that 9. So we can look at it from a different time frame. So there's a 2-minute. That's what she's looking on the 3-minute. Okay, so and you can even look at it on the 5-minute and see just how grand and glorious it is the higher the time frames. So does that explanation make sense? Does that for anybody or for everybody, does that make sense? And just talking about from a price action standpoint, the why behind you'd want to put on a trade versus maybe staying away from a trade. You know, for instance, you have situations where you're kind of caught between a couple of zones. You know, if you're caught between a couple of zones, take your hands off the keyboard, folks. Put your right hand under your right butt cheek and your left hand under your left butt cheek. And again, folks, these are just my opinions. These are just my opinions. That's how I do it. Stuck between zones, wait for confirmation to get through strong zones. It's going great, Pedro. Question, what is your recommendation if cross happen in 1 minute but not on the 5? Okay, especially with reversal play. Again, we're going to look at the same thing, Mustafa. So let's look at this time frame right here. Okay, so let's look at what's happening right up here. And again, we've got that major zone. We can call this area a major zone. Now, could you have taken this play right down in here? Yeah, you probably could have. You know, you're getting across to the downside. Probably let it play out. But let's look at, let me see, 10:59. So essentially 11 o'clock yesterday on the 5-minute. And this is what it's looking like at 11 o'clock. Here's your 10:55. Here's your 11 o'clock candle. So you are starting to get that cross to the downside. If we look at it on the 3, excuse me, it becomes a little bit clearer. So we're already through the 9 on the 3. Trading view is amazing. So obviously you want all of your time frames to line up, but you're never going to get that, particularly if you're playing reversals. What's up, Nelford? So again, folks, you want to take those puts directly below a major level of, you're going to call it resistance. So it's a 30-minute zone. So does that make sense, Mustafa? It's absolutely better for a candle close, JL. Okay, you're welcome. And again, folks, it's our job as traders. Our job as traders is to execute according to our trading plan. But it's our goal as traders to get marginally better every day. So we want to just every single day just try to get a little bit better. It's you'll be amazed at where you are a month, 6 months, or a year from now by just making small daily improvements. Okay, Matt, every morning draw your lines looking at the 30, 15, 5. Okay, but sometimes I find myself drawing many lines. Do you limit the number of lines typically? We had a situation, it was either last week or the week before, and it turned out to be one of those days that was just blah. It was just not a fun day in the market. I had, I think, a total of $1.60 between the pre-market high and the pre-market low, and I had 8 lines. Well, thank you, Fibs. I appreciate that. You are absolutely the Fibs master. That's hence the name Fibs. I still call you Ski, West Virginia trader. We go way back. But so let's say you got a $1.50 in pre-market movement, and you got 8 or 9 lines on there. Man, it's okay to walk away for the day. That's okay. All right, question for the very first play of the day. Do you target a specific point or just stay with the 9? So what I'm looking for is I'm looking for targets. Okay, so obviously we want to ride the 9 as long as we can ride the 9, but we are looking for targets. So we're looking for, just like we want to execute our trade, so calls directly above a major level of support, so a 30-minute or a 15-minute. We want to look for targets along the way. So we've got a target here, we've got a target here. this, again, this is a pivot point up here. So we could look. Let me see. I think I closed out the trade right in here because at this time I didn't have another fib on my chart. I was not interested in really taking a reversal out of the play. So a win here, loss here, and then I just slammed this one back. So just ride it wherever it is, and then switch time frames, folks. Switch time frames just to make sure that you can stay in trades an awful long time if you'll just watch the time frames, folks. And again, watch where your specific targets are. The 1 minute candles, they are absolute heart attack candles or stroke candles. Switch to the 2 minute. It's just a different perspective of what you're seeing. It's just much more clear, and you don't get the helter-skelter all over the place. So switch to the 2, switch to the 3, whatever allows you to remain more calm in the trade, that's what you need to use. Let me see. When you try to avoid reversals, would you try to? Well, it depends. That's a really, really good question there. You're looking for reversals, again, off of major lines of support or resistance. So again, you're looking for major. Let's go back even further on this. So let us go to the 30-minute chart. Here's the 15, here's the 30, and here's what you're going to find on the 30-minute. Again, let me block this out so I don't have any more bias. So I got this double top over here, and again, this is on the 30-minute. I've got, and again, that double top. Let's see what I can find. Again, I've got this area right in here. Should be a pretty big area. 5, 10, 16. I don't think we got down there yesterday, but I've got, maybe we did, I don't remember. We got this, essentially all this action down here. Now, when I switch back to the 1 minute, here's what she looks like. We're going for all of these levels again, folks. See all these levels down here? You can make assumptions. Absolutely, Ruben. You can make assumptions that when you get down to a specific demand zone, so demand zones generally are down low, supply zones are generally up top. You can make the assumption that when you get down to a demand zone, that you still have that demand down there. People are still defending these positions down low. So, we're trending down, but what do you have? And again, look at your higher time frames down in these areas and just see how good the demand zones are. Again, this is a supply zone, but that old resistance kind of becomes new support at some point. Let me see. Hold on here a second. What's a good rule with paying yourself? For example, if somebody makes about 500 a week trading, then how much should they pay themselves? That's entirely up to you, man. That's entirely up to you. This last question I know is different from people, but what is your recommendation for position? Oh, perfect, Mustafa. My recommendation is you start with a single contract until you can perfectly execute your trading plan without making trading errors for 20 trades in a row. And it's not until you are able to, and again, if you break a rule, you start over. So you go from 1 to 2 to 3 to 5 to 7, and then move up to SPX. And then you go from 1 to 2 to 3 to 4, and wherever you want to stop, that's where you stop. That is my recommendation. I've got what's called the 20 trade challenge. I've got it. It's available if anybody wants that. As a matter of fact, let me see. I will put that right here. Let's see. Trading strategy. Open. There you go. There's the entire thing right there. Don't go all in. You need to know when to go all in. Let's see. Next. Good day, Johnny. Can you describe how you set up your charts when trading view, i.e. Pre-market high? Yeah, I'll do that again here, Johnny. So what I'm looking for essentially is, again, let's go back to this higher time frame. And again, this already printed out. So what I'm looking for is I'm looking for pre-market high, I'm looking for pre-market low, and then I'm looking for 30-minute zones. Now, previous day 30-minute zones are really, really good to use. So you want your 30-minute daily zones, from the previous day. You can even look at some zones from pre-market. That's how I did it. POC, you guys talk about POC, volume profile. Let me bring up a little volume profile for the uninitiated. So here's what we are going to do and see if we can see it in all of its glory. Because if you guys are using TradingView and you are not using volume profile, oh my goodness, you are not getting the full effect. I mean, it is one of those. There was a Reddit. I did not, JB. I did not. I'm going to play tomorrow. Okay, so here's ES, and we're going to take a look to see if. Nope, no more volume profile. So generally, if you've seen volume profile in action before, it's absolutely amazing. Check out my video that I did yesterday. Actually, go to one of my videos from last week. It is labeled volume profile, and you will see volume profile in action. Asking for a friend, what kind of batting average do you use? 920. I know each strategy has different. Well, it just depends. I'm at about between 65 and 70%, so I have plenty of wins. I've had a lot of wins lately, which has been very nice. The first, when we started hitting those all-time highs, it obviously became more difficult to trade. Oh, that's awesome there when I heard Lionel. That's awesome. So yeah, that's what it is. I'll have to look at it for this year, though. I don't keep a running tally. I typically look at the end of the year. I know generally pretty close to where I am. How do you set it up? Are you talking about volume profile? It's volume profile, KV4 coins, and and Ski, in about 7 seconds, Ski is going to put a link directly for volume profile by KV4 coins. Most of your losses are when the trade go against me, even when well executed, when it go in my direction, but right after I take the loss. How do you manage your exit points? Do you ever let it go against you when your trade is down? For me, it is not a specific percentage. See, there it is right there. He always does it. He has that thing like on speed dial. It's right there. There's your volume profile. So here we always, and I talk about this, Fibs talk about this, Jimmy talks about this. Every single trader out there who's ever traded at a decent level says you must predefine your risk before you ever enter into a play. And the question is, okay, how do you predefine your risk? Well, here's my risk. I'm looking to breach this level down here, and then this level becomes my stop. So over here on this play, I had a couple levels. I had this level right here, and I was upside down, for the, upside, I was on the good side of it, then upside down. But again, the same level, I used to say the same candle that gets you in will be the same candle that gets you out, but I kind of changed everything when I started putting a few more high time frame lines on my chart. So now that level, if I breach this level back to the downside and close, I'm getting out. So a 40% loss, it's a bad entry in my position if your stop is 40% away. But again, that is my opinion. That's my opinion. We want the cross of the 9. We absolutely want. So that's what we're looking for. We're looking for confluence. And again, as 920 traders, we want confluence. So generally speaking, your best plays as 920 traders, you want to get across to the downside, and you want to be directly below, for puts, directly below that major level of, old support, new resistance. So in other words, that supply zone up top. And then from the bottom side, directly above. So you want this cross to the upside. This was a beautiful play in here, which I was not in on. The POC was up in here. And I took a breach of the POC wherever it was. I think I got in on this candle right here and then wrote it up. We actually thought we were going to VWAP. We did not. But yeah, so that's how I predefine my risk. So that's it as a stop. That's what I'm talking about. You talk about a stop loss. I'm talking about it the same thing as saying a predefined level of risk. Same thing. Okay, you're welcome, Cash Money. So again, predefine that risk before you ever put on the trade, folks. And again, once your edge is there, you execute. Again, that's our only job as traders, is to execute according to our trading plan. Bullmaker, it's good to see you. Bowmaker, feel free to send me a message. I tried to send you one yesterday. You know, I know all the back and forth yesterday, but feel free to send me a message. I'd love to help you. I mean, not that way, but I mean, love to, if you need any help, love to help you. I was in the same call you took L yesterday. Yep. Oh yeah. And again, it was this trade right in here, folks. You know, we got down to this zone right in here. You know, I'm thinking, okay, I get across, I get this, I have this right in here as my support. We bounced off this, took this back to the upside. I'm like, I'm going back in calls. Man, thank you, Fibs. Man, you know, I love you, brother. So again, took the loss in here. Folks, there's a random distribution of wins and losses given any set of variables. Any set of variables. So put on the trade. If your edge presents itself, put on the trade. Haven't used 920 yet, but I've been looking at it. Was there a big cross to the downside at roughly 1240? 1240. So let's go to 1240 right in here. Oh my goodness. It was beautiful. Absolutely beautiful. I was not in on this trade. I was not in on this trade either. I went to lunch in here and I missed this. So here's why I missed this trade, folks. If you look at this business just to the left, we had 60 and 70 cent candles in this area. And I thought, man, I'm just going to leave it alone. It would have been a safe play, you know, jump in on this candle. But I missed it. I missed it. And again, that's a little bit too late for me to put on the trade, but I missed it. But it was beautiful to the downside. The same candle I get in, and that's a good rule, Joe. That's a good rule. I mean, your play in here would have been a breach to this side, you know, essentially on this candle right here. I mean, you could have taken this double cross, actually a triple cross, because it's a 920 cross and a candle cross all at the same time, the old triple cross. Your safest play would have been down here, enter on this candle, right over here. But again, take the cross. Take it. Here comes Fabaro. Utilize time and price. Times do not change. Price action does depending on the day. Perfect. Hey, it works for you, my friend. It works for you. And again, I use volume profile. So, yes. Just different strokes, my friend, different strokes. The good news is we both enjoy the same time frames. We're all on the same highway, folks. We're all on the same highway. Some are at different mile markers. Trust yourself. I don't believe it does. It might. I don't know. 1 minute candles shake me out too fast to look long. And 3 minutes in to hold my greens. Yes. Thank you, Pedro. 5-9 on the 3 and trying to stay disciplined as I can be. Watching Jimmy's best content. You, man. Thank you. Thank you for the kind words, Pedro. I appreciate that. How do you get POC? Okay, so Peter JW, scroll up just a little bit, and Fibs put a link for that particular indicator. It's called Volume Profile, and it's by KV4 Coins. I was on this, you know, I check Reddit every now and again, the day trading sub over on Reddit. And, you know, people are like, what's your favorite indicator? And I said volume profile by KV4 Coins, and I think I had to answer about a dozen questions. Best indicators of a trend reversal. Okay, so let's say we're going back to the downside. What you're going to look for is you're going to look for strong areas. Where did we go? You're going to look for strong areas of support. In other words, demand zones. You're looking for demand zones. Essentially, last time you were there, last time price action was there, it was essentially, there's a demand, okay, and they're defending positions at that specific price point, at that price level. So you're looking for those. And again, I look for 30-minute zones. Your 30-minute zones are 30-minute are stronger than 15. 15 are stronger than 5. 5 are stronger than 3. 3 are stronger than 2 and 1. Take your time learning it, Lionel. Just take your time. I mean, it's just like any other chart. It's very intuitive, but take your time. Dig in, but take your time. So that's what I'm looking for, Landpire, is I'm looking for 30-minute areas. So a lot of times what you'll see, if you're watching like a 1 minute candle, what you will see is, and you see this regularly, you see the price just dump, 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 and then all of a sudden you get this giant wick. And if you have If you have 30-minute zones, you'll see this giant wick that goes down and taps this zone. That's your reversal zone, and then it shoots right back up. You will see, we see it regularly. It's like, oh, that was a big wick. I mean, if you're in puts, you want to get out on that wick because, again, it's a strong signal that you're coming up on a demand zone. What trading view plan best? I do the premium. I have everything that I need to know, or everything that I need to have on the premium. And Land Pirate, you are welcome. What's up, Geek and Ellie? And Stone Monkey, Stan Ralph. Stan, I haven't seen you in a while. Good to see you. And again, I said hi to everybody earlier, but you guys couldn't hear me. Man, good job. Did you just contact TradingView and say, hey, I want the 60% off? What's up, Fourth Quarter Boomer and Dark Light Seeker? And again, everything that I say in here, folks, these are just my opinions, and I know what works for me. Not financial advice. Everything I say, I make the assumption that everything I say is recorded, and I will stand by everything I say. And sometimes I make mistakes, and that's okay. What? Can you describe what the big boys are doing during accumulation? Oh, you want to talk about essentially the 4 stages of, it's called the Wyckoff, the 4 stages, the Wyckoff 4 stages of the market. So essentially what happens, again, in the 4 different stages, and you can look at this on any time frame. So you have the 4 stages. So your first stage is what's called accumulation. We had one of these days just a few days ago. Hold on one second, guys. Hold on one second. Okay, so the big boys. Essentially what the big boys are doing in a period consolidation. You look at a chart and you can call it a consolidation. You can call it accumulation. It's where it just kind of going up and down in a small range. It doesn't appear as though there's any volume. Okay, we had one of those days last week. Let's look at that. Let's see if we can get to that, because once we broke out of that zone, which day was it? This is Tuesday. It might have been Monday. Might have been Monday. Could have been last Friday. Now this is Monday. I think this was it. Yeah, this was it. So all day long, folks, all day long. And my level was, yep, this is it. All day long, you just kind of bounced around, had these little moves, these soul-crushing moves. And if you look at it from a volume standpoint down here, you can look at the volume, it's like, it's just okay. There was nothing really great about it. And you're thinking, well, it's a nothing day. So here's what happens. The big boys, so it's the banks, financial institutions, hedge funds, they are slowly accumulating positions. So they accumulate their positions slowly as to not run up the price fast, okay? Because again, they're accumulating, they're building their positions. And again, in doing so, they have to do it slow enough, a little bit of buying, a little bit of selling, as to not tip their hand. Now, we didn't have anything over here to the left of us, but if we looked at volume profile, and we're watching volume profile on all the different time periods, there was no volume. So there was thin volume. There was nothing up here to where when they got to this level up here, they went all in and they pushed the price and they rammed the price way up there really, really quickly. So it did a couple of things. It allowed them to, number one, push the price. And then number two, so we have the accumulation, the slow accumulation, followed by what's called markup. So this is the second phase of the four phase cycle. So you have the markup, that's where price goes up. And then you have what's called distribution. So it's distribution, they're selling off, but they're still buying a little bit as to not drop it so fast. So it's buy, sell, buy, sell, buy, sell. And then all of a sudden, guess what they do? They drop the vol, they just hammer it with volume, with short volume and selling, and it comes right back down. So that is what it is. Accumulation followed by markup, distribution, and markdown. And again, you can find that. It's called the Wyckoff distribution, whatever. Wyckoff. When a candle passes through a support level, do you take into account if it does break and retest? Yeah, I mean, everything just depends on what we're doing relative to the 9 and what time frame I'm looking at. So yeah, I do always take that into consideration. I mean, the retests, I mean, you got some really good plays on the old break and retest. What's up, Genghis? And again, if anybody would like to jump on here, raise your hand. We can have a conversation. We don't have to do, maybe like 10 minutes before I dumped, that's where I bought. You bought at the top and sold, and you shorted it down, didn't you? I remember that. I remember. Because we're building a level, we're building volume. So if you look at volume profile, again, folks, if you don't have volume profile, the link for it is up above. It's worth it. What the volume profile is going to show you is it's going to show you areas of heavy volume. You've got a bunch of shadows out here is where your volume is, and areas of thin volume. Price tends to move from areas of heavy volume to thin volume and then back. So from heavy to thin, thin to heavy, and on and on and on. In areas of heavy volume, price tends to move very, very slowly unless there's a catalyst. Now, once you get into an area of thin volume, so fewer positions being defended, you can make the assumption that price is going to move very, very quickly. Now, the double-edged sword is that it moves quickly both to the upside and to the downside. Okay, so again, volume profile. And again, if anybody wants to raise their hand, just say, hey, I want to ask a question, and I'll put you on here, and then we can have a little chat. You got to smash first, about the right down. Yep, consolidating. The hell for the second leg down and not the third. Hey, nothing wrong with that, brother. Nothing wrong with that at all. How you doing, Jen? Good to see you. Next questions, folks. Who else has got something? So I bought a second monitor. I've always been a one monitor guy, but I bought a second monitor, and I think I'm going to like it a lot because what I'll be able to do is I'll be able to leave up the 1 minute or the 2 minute on the main screen, and then I'll come over to my second monitor, and then I can talk about specifically what's going on the higher time frames without switching back and forth from the chart. You have 7. Good for you. That's a lot of monitors. So not the 10, but every now and again I'll watch the 50 and I watch the 200. So I use the 200 as obviously support or resistance. And the 50, I used to use the 50 a lot when I was trading stocks. Oh, but for work, gotcha. You can monitor more. Yes, you can with 7. 7 is more than 2. Yeah, never forget about the 50. And some people call the golden cross to cross the 50 over the 200, but that's more like on a daily thing. If you get a daily, you're looking for a trend reversal at that point. And water is wet. Indeed. On volume profile, was considered small, average, large volume. I see the visual side panel on your chart. Yes, that's one of those things that you just have to look for. What you're looking for, and again, let's see if I can find, no, there's not going to be anything. Okay, here we go. There's volume profile. Here it is right here, folks. Here it is. And I had to go to a higher time frame. I had to go to a 4-hour chart to see what we are looking at from a volume standpoint. This is volume profile, folks. 4-hour POC is way down here at 474. So here is a good representation of what volume profile is. It shows you all of your areas of heavy volume. Okay, so we got these big volume nodes and areas of thin volume. This area right in here, I was actually looking to breach this on Thursday and take it down about a $2 drop in just a couple of minutes because of all this thin volume. But this is what we're looking at: heavy volume areas, thin volume areas, heavy volume, thin, and so on and so forth. So you can keep on going down. And again, POC, this is the price on the 4-hour that most money has changed hands. And again, this is directly below our all-time high previous to about 6 weeks ago. The old all-time high was 479.98. So we had this big push, and then we started getting through levels. But again, look at all this thin volume. Probably had some news in here somewhere, or just a quick flash to the top. All the time. Absolutely, Nelford, all the time. You know, as being a 920 guy, I didn't start putting lines on my chart up until very recently. Spinning squares only. I don't know. Yeah, so I mean, I used to just trade the 920, and that was it. But what I found by using the strong zones, the 30-minute zones, it'd be nice if you give control of the pointer to others. Can't do that. Don't know how to do that. Not possible. Yeah, exactly. So what I like about the lines, and I don't like to have too many, is and regularly I'll switch over to a Webull chart because I don't have any lines on that. What I like about the lines is particularly big 30-minute zones. So that's what I like about the lines. It would be nice, yep, if you see thin volume in a higher time frame. No. So it happened yesterday, folks. We were watching the 1 minute, and we had, let me get back to that. The 1 minute. We're watching the 1 minute, around this time. And up in here, it showed all of this thin volume. And they're like, hey, there's thin volume there. And I'm like, well, hold on here a second. So I switched to the 5 minute and said, no, there's not. It's not showing up on the 1 minute for whatever reason. So I checked the 5 minute, and we were just in a major volume area in all of this. So it just takes more. But again, once you get into that thin volume area, buckle up, because that's where you really get those nice rides. But trading View accidentally because I didn't cancel the free trial. Do you know if that's for a year? It will not. Well, it might, depending on which plan it is, Genghis. Depending on which plan it is. So again, the thing with volume profile is, it takes some getting used to, but once you kind of get the hang of it, it's amazing. Yeah, give them a call, Genghis. Absolutely amazing. Because, folks, you guys hear me in here regularly say, folks, we got a thin volume directly below us. If we can get to this specific level, this is the expectation. This is where I expect this thing to go, either to the upside or the downside. And it's pretty amazing because it happens. It happens, and it happens almost every day, folks. And again, if you're in on one of those plays, they're very, very nice plays. It is absolutely both support, resistance, and a target. Yes, but because volume is changing all the time, I'm looking for the POC to change. Like a late day change, we had a nice one on Wednesday. We had a really, really nice one again on Thursday. Don't remember, I can go back to my Wednesday chart and I can almost show you exactly where it was. Here's Thursday. That's Thursday. I can go back to Wednesday. This is after hours. Maybe it was Tuesday because this looks kind of ugly Wednesday. Must have been Tuesday. Yes, it was Tuesday. Here it is right here. POC at this time, folks, late in the day. Now, again, this is late in the day. It was riding up here. Now, at 2:45, I think it's 2:45. Yep, just about 3:45. 3:45 on Central Time. So at 3:45, right around here, the POC went boom and dropped down below. And it was on this candle right here. And I said, guys, If this candle right here at 1543, if this candle closes above the POC, which is right in here at this time, if we get a candle close above this level, we're going to use this as support, and we have a really, really high likelihood of moving back to the upside. I think my level at this point was like 57, 58, somewhere right around in here. I think this was it right here, 57. We went exactly to that level, pulled back a little bit. We got the 350 candle right in here, and then went up to VWAP. So yes, always trust your POC. Again, it's support, it's resistance, particularly when it moves. When it moves late in the day, right around to where you are from a price action standpoint, it signals good things. Does everybody else see my chart? Can you see my cursor moving around? Okay, very good, very good. No cursor, it's lagging. Let me do this real quick, stand by. I'm going to stop streaming and I'll share it again. Okay, had to restart it. There you go, Jorge. All right, so it should be back up, folks. There we go, there we go. It goes on and off. Yeah, I don't know. It could be a Discord thing. I don't know. I don't know. Sometimes it's just an issue. I don't know. Is it safe to assume you're getting into a trade when you identify? Yes. Okay. All right. There are signs. There are signs along the lines of, we just had a cross to the downside. We just got through a major level, a 30-minute zone. If you are looking to go into puts right here or on the close of this candle, your stop needs to be this. So you can make the assumption based on that. And again, because I cannot offer financial advice and I can't say, well, you need to put on a trade right here or anything like that. And again, I'm trying to manage my trade at the same time, and it's all hypothetically. I'm moving it now, moving it now. So those are the things that, again, if you hear those things, you make assumptions, folks, make assumptions. If you have a cross to the upside coming directly out of a demand zone, down low, you have to, number one, what's your risk? It's very, very minimal. So again, you're coming out of this demand zone down here, and these lines were from the day before, okay, that I put on my chart. You're coming out of this demand zone, you got to cross to the upside. What is your assumption? Your assumption is, well, you got support down here. What do you have to lose? Well, let me see, you got 73, you got 40 cents. I mean, that's pretty big if it moves against you. Quick question. Put on the play when the double cross happens, or you wait for the next candle. It depends on the play. So if I get a double cross directly, so I take a double cross, that's a 920 cross to the upside. So it's opening below the 9, closing above the 20. If that all happens directly above a major zone, put on the trade, man. Put on the trade. Because again, the closer to you are to that level of support, the smaller your risk. The further away from the zone, you are increasing your risk. So keep it close to one of your strong levels. Seen the failed VWAP test and I didn't get out. Yeah, that happened yesterday. I mean, this was the play. So Genghis yesterday had he's been getting really, really good with his entries. He got in right around here and rode it up and didn't close out the trade. So it did not turn out well. I thought we were going to VWAP. But again, we had these two levels. Again, these were from pre-market. These were already here. We failed to get over here. I was in this trade and closed it out right here because we breached the 9 to the downside. But again, I didn't get in till once we breached, POC moved. So POC moved down and then I took it up. So he was in a lot earlier. His percentage was massive. I know you did. I know. And again, you're coming directly out of this demand zone right here. So again, put on the trade, folks. What is the approximate amount of your risk on trades? 30 cents is generally about as far as I want to go on a zero DTE, particularly late in the day. That's huge. 30%, 30 cents rather, goes against you pretty hard when you're dealing with multiple SPX contracts. I know you did, Genghis. Yep. But again, the closer you are to your major level, that's going to give you your level of risk. So if you can take the, one of these candles in here, take it. Take it. Dr. Dre, good to see you. And Sazen and Harp and Bowmaker, MBH, Fortunate, Cap, Brierson, Trav, always good to see you. Jail Fire, Nelford, Jason, fourth quarter, Darklight Seeker. I said hello to everybody, but again, nobody could hear me. Deuce. Wish I could do full port. Do not do full port ever, 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 unless your full port is like $100. Don't do full port. But at the same time, have conviction in your trade. Having conviction in your trade and going full port are two totally different things, folks. So, yeah. Yeah, exactly. Never go full port. Crazy man on the loose. Yes, indeed. Who else got a question? Been going at it for about an hour now. I know you did it. We've had those conversations, 1-800-Lionel. And again, if anybody would like to jump on the mic, raise your hand. Raise your hand, and we can make that happen. Got one, Mark. Okay, when you bought that cheap contract on Webull, the other. Oh, yes, no. Okay, so that was a test put. That was a test put. I'll show you exactly where that was. That was Thursday afternoon. That's the only trade I took on Thursday afternoon. I think it was this trade right in here because we had the POC right here. It rejected off this level right here, and I meant to buy one SPX put. It was a test put to see if I could mark it into a trade on Webull. And lo and behold, apparently you can mark it into. I meant to buy one, I bought two, and yeah, it was a big boy. Oh, that was JB, man. That was JB. How can you go back and back test and work on your price action all the time? All the time, JB. Every day, every single day, every night. So here's what my day consists of, folks. I get up early. Obviously, I eat breakfast, drink coffee. I come in here, I set my levels. And then I meditate every single morning. So I meditate between 10 and 20 minutes every morning. Then I get on the mic, eat a short. Man, I have to wash my face. That's a thing that goes back quite a long time, folks. And if you were in here back a few years ago, Carlos, one of our former members, he'd always have to wash his face before he traded. So that is a thing. That is a thing. So then, short lunch, come back on the mic. I do my video at the end of the day. And then I still I'm mostly retired from my business of about 30 years, but I still have a couple of not small clients, but a couple of clients that I still take care of. And then at the end of the day, obviously eat dinner. And then I review the chart for the day. I review my plays for the day. I do my trade log. I do my trading diary. And then about just a couple hours just trying to tighten things up. So probably 16 hours every single day. Let's see. And again, that was JB. Yeah. So if you can mark it in with Webull Poly, why use TD? Because you get better fills with TD. It does. It crashes regularly. How do you find trading with options versus trading with stocks in terms of how they move? They move, well, the price action moves the same way, but options move faster because it's leverage. So it's leverage. 1-800-Lionel, thank you for being here. It depends on the delta. So it's essentially 10 times the cost of a single SPY contract. So if you're spending $100 on a single SPY contract, you're spending 1,000 with SPX. It's basically 10 to 1. Wouldn't getting 5-10 worse feel better than missing out on it because the crash or worse? Yeah, maybe. And again, I just did the test. Commission is absolutely cheaper. It's absolutely cheaper. I don't have a whole lot in that Webull account right now. Pulled most of it out. I know you do, Genghis. I know you do, but it crashes all the time. TD crashes all the time. My biggest gripe with Webull is that you could not mark it into orders in periods of high volatility. I know you are. I know. So I might consider putting more money in my Webull account. I've got enough to, make enough SPX trades, but we'll see. Who else? What else we got? Crashing is absolutely a turnoff. And again, I think the volatility on Thursday afternoon when I took this trade was around 20%, so it's fairly high. I didn't think that I would be able to. But again, I meant to buy one, I bought two, and it was a good thing I bought two. I think nothing's wrong. No reports. But make sure if you're trading off your phone, make sure that the app is updated. This is Thursday, so that's Thursday, and this is Friday. Have you thought about trading futures? Yes, I have thought about trading futures. I have. But I go about between 14 and 16 hours a day right now, so my plate's pretty full. I don't know if I could go another couple of hours or even an hour, only because I'm pretty blasted by the end of the day. It's inexpensive, super inexpensive. I don't pay attention to the contract fees. I think I don't know. Round trip is cheap. And again, I'm not concerned with that. I don't care about the contract fees. I just care about fills. Told me to delete the user file. Yes, that's on desktop. I don't know if you can do that on mobile. Just leave some cash in your margin. So in the PM, that's true. Contract fees. Yeah, absolutely. Yeah, there are definite advantages to Webull, folks. If you're trading a single SPY contract or 2 or 3 SPY contracts, trade Webull. Because you can buy the ask or add a couple of cents to the contracts. Not a big deal. But I don't like missing fills. Well, I've been trading TOS on Schwab since the beginning of the year, so I haven't had any issues. Well, do that thing there, Genghis. Do it. Do it. How can put bias be avoided knowing that going up is stairs and elevator coming down? Okay, so we're all human beings, so we all have a tendency to have a bias every now and again, and bias as a trader will destroy you. So generally we have bias when there's no congruency between Main Street and Wall Street. So you see what the economy in general is doing, and then you watch Wall Street, you watch the market keep going up and up and up, and you're thinking, how can it go up? It has to come down. But just play what's in front of you. Seriously, just play what's in front of you. Kind of suspend reality of what you're seeing on Main Street and just worry about what's on the candles in front of you. That's how we get away from that. Mr. Session, because I was asleep, is it recorded? Yes. I thought one of our folks recorded it. But again, folks, just suspend your disbelief. Pay no attention to the man behind the curtain, folks. And again, we've all done it. It's like, it can't. Here's a perfect example. Now, Phibbs is getting ready to put a date on here. And before I give you the date, he's going to give you the date. And we're going to talk about bias. He's getting ready to put this date down. Here he comes. It's 224. It was February 24th, 2022. Pre-market ran down about $10. So at open, a lot of people made the assumption that Phipps lost a lot of money that day is what he did. February 24th, 2022, if you look back through history, what you are going to find is that that is the day that Russia invaded Ukraine. So again, we dropped $10 in pre-market, and everybody made the assumption that it was going to continue dropping. So people were like, puts, go all in on puts. And a lot of people did. A lot of people lost their shorts. So what did SPY do that day? Oh, man, tell those guys I said hi. Tell those guys I said hi. I don't know if they can hear me or not, but what's up, wake, Chris? Yes. It ran $18 that day, folks. It ran up $18 that day. Now, because I still had the bias, I went either 6 for 6 or 7 for 7 that day because I thought that there's no way in the world that it can keep going up. There's no way. So I'm taking these small scalps all day long. Exactly. So that's what bias will do. Bias will destroy you both ways. It will destroy you because you say there's no way it can keep going up or there's no way it can keep going down. Exactly. So Fib's story, and you guys have probably heard this, he lost a good deal of money that day, but it was that day that his fortunes changed because Jimmy said something in, we had a Jimmy talk that night. Yep, $26 between the 2 days. Jimmy talked that night. And something that Jimmy said clicked with Fibs, and it stuck with him, and it has allowed Fibs to become an incredible trader. Yep, a lot of people did. I didn't think it was going to keep on going up, but every time I looked around, it just kept on going. And what could have been a massive day was a good day, but it could have been a massive day. So, yeah. Wait for the candle close. Yes. Wait for to close a losing trade. Yes, I do, Johnny. I do. I do wait for the candle close, and that can be problematic. So here's why I wait for the candle close, because it's that just that little test to the downside. So I wait for candle close unless it's one of those candles that comes out of nowhere. And generally, you don't get candles that come out of nowhere, folks. I mean, there's a reason. There's always a reason. You hit a supply zone, you hit a demand zone. That's when the candles come out of nowhere. But when you get one of those candles, you have to mark it out and just lick your wounds and move on to the next trade. Even if it hasn't closed, you get a dollar candle, better get the hell out. You know, particularly if it's, you can blow past stops, folks. Your stop loss does not guarantee that you get out of the trade at your set stop loss. It can blow through your stop losses. You got stop loss set at 50, it blows through, it closes you at 10. That's just the nature of the beast. Still have to have somebody on the other end. In the long term, it did change your life. Do you have a limit on how many trades you put? No, I have no limit. Now, if I'm making too many trades, I'm probably going to snap myself and, shake my head a little bit. If the setup is there. Now, I will tell you this, though. My preferred times to trade are going to be the first 2 hours, hour and a half, 2 hours, and then the last hour of the day. Generally speaking, I was crushing a water bottle. Generally speaking, that's when you're going to get the best price action. Stop prices, breach the stop order becomes a market order. Exactly. Yep. So again, but I typically like to wait for those candle closes because I don't like wicks taking me out. That's why I don't set a mechanical stop. And so here's the thing. If you don't have a stop, you're going to lose your money, but it doesn't have to be a mechanical stop. Somewhere between 65 and 70%. It's actually a little bit better than that this year, but historically, that's what it is. Don't mind at all. Wicked out hurts. It does. That's why I don't like wicks. That's fine, folks. Switch to a higher time frame. There. Switch to 3 minute. Again, don't get so mesmerized watching 1 minute candles. They're literally heart attack candles or stroke candles. The wicks absolutely tell the story. There's absolutely a story in the wicks. 100%. But I don't like wicks to take me out. Now, what do wicks tell you? If you have a wick down low, what does that wick down low tell you? Oh, absolutely. There are stories of people with 10% win rates that take money out of the market like it's crazy. So what do wicks down low tell you? What do wicks up top tell you? There's selling pressure. You got a wick up top, there's selling pressure. You got a wick down low, there's buying pressure. So there's a story to be told in everything about the candle, folks. Yep, so I don't like wicks to take me out. Finally, without a mechanical stop, tend to hold and hope so it's a better place. Well, then, CG Bear, you keep on doing that, my friend. Keep on doing that. And I don't trail my stops either. I don't think that I have, JB, a footprint chart. If I have, I don't know it by that name, but I don't think I have. But have you seen these? Ho, ho, ho. Shows volume in the candle in control. Okay. I'll check it out. Have you guys ever seen Renko? Look at Renko charts. A large wick in any direction tells me that we got EQ either build more momentum or continue in the same direction. 100%. 100%. Again, we talked about that here just a few minutes ago. We talk about, when we see, let's say we're in a big downtrend and we get that big wick that wicks into a big demand zone low or supply zone high. Boom. There's a story there, folks. That's either the buyer's low or the seller's high, or that type of deal. They're getting ready to change on you. Could be. So typically you see the stop loss hunts, the raids, the stop loss raids, a really quick candle, not close to an area of support or resistance or a major zone. They'll just run it real quick. They're just running stops. So you get this move that's running down. You get one of these candles that goes whoop. Takes out the shorts, and then it just keeps on going down in the direction. Number of contracts on a candle. Where are you getting that from? How can you call it the number of contracts on a candle? I don't know that I call out the number of contracts on a candle. I call out the volume of shares. Okay, because this is what your volume down here shows. That's the number of shares. Okay, so all right, look on the left-hand side of my screen up here. So I got volume. Now, as I scroll down here, I can see minute by minute by minute how many shares have been traded during that 1 minute. So that's what I'm looking at. That's what I'm looking at right here. Yeah, I don't know what it is, man. Yep, so it's just the volume. It's the number of shares that are traded. You absolutely can do. You can do a look back. You can do it. When I did my initial testing, what I did was I went painstakingly candle by candle by candle by candle, single candles over a 6-month period. So 1 minute candles over a 6-month period. It was painstaking. Hey, have a great day there, JB. Man, we're going to have a good day on Monday there, JB. But yeah, you can do a look back on SPY. Mahala, what's up? Again, folks, the main thing is execution. It's all about execution. Our job as a trader is to execute. Our goal is to get marginally better every day. So to learn a little bit more. So learning a little bit more, folks, will give you the confidence to get into your trades. Look back on those days I've gotten out prematurely based on the 1 and looked at the 5 and saw it never got above the 20. And yep. Yeah, man. Yeah. Look at this. There you go. 5-minute chart right here. There you go. There's your 5-minute. There's your 3-minute. You still get your targets along the way, folks. Yep. Trust your higher time frames, folks. Trust your higher time frames. If you're showing it, I don't see it because it's still stuck on the screen. I don't know what to tell you, man. I don't know. Here's what I mean with say you're in a range. Yeah, that's it right there. So you can call that a period of distribution, consolidation, or accumulation. That's really just distribution on the way back to the downside right in here. That Fibaro. The Fibaro Gigolo. Loading up those shares again. They're slowly accumulating their shares to sell, to short sell back to the downside. Monster green candle. Well, it is, but if you look at it in context, where's it going? It's just picking up more sellers up here. What's up, Harp and be opposite? Liquidity, man. Liquidity hunt. All right, who else has a question? It depends. If we are, so let's say we're between zones. Let's say we're between zones, between major zones. We can always use that as resistance. And then if we breach that to the upside, if it's a major zone, take yourself out of the play. But everything depends. Again, know where your specific levels are. That zone also formed a double top on the 30. Perfect. Who else has got something? And again, if anybody wants to jump on the mic, raise your hand. I'll bring you over. Here's a question you seem to get out of way before I do when we aren't breaching or closing below a target area. So how long do you wait before a breach or break? Like, are you talking about specifically on this play yesterday? Or generally speaking, if we have, okay, so if we have a hard time getting through a zone, okay, up in here, look left, see what we did the last time we were here, and then make your decision based on that. Indeed, because it seems like the candle that follows is massive and I get absolutely wrecked. Yeah, again, just, we tested, we have 2 zones right in here. And again, look left, see what we did earlier at this level. You're going to make assumptions based on what we did in the past. So if we were to able to freely get through this zone and then up and through VWAP, then we can use VWAP as support. Again, look at your 5-minute. So here comes your 5-minute again. Look at these zones over here on the 5-minute. We touched them, but then it just fell right back down. And what you can do, folks, is you can just, go from major zone to major zone. Well, and I talked about this in my newsletter last week. How we have the ability to look at a chart after everything is printed, and we're billionaires. but that's after everything is printed. It's our ability to execute when we're supposed to execute. That's what matters. So if you see a pattern, okay, well, we get to a major zone and it rejects off this zone. We got rejection off this zone before, and we have a hard time getting through that zone. It probably behooves us to take ourselves out right there unless we can breach and hold above or below for puts. Again, that higher time frame. Look at the 10-minute. See, that's what your 10-minute looks like right up here too, folks. See? Higher the time frame, the stronger the level, folks. Also, engulfing candle rule that I use sometimes to get in before I confirm. Oh, yeah, absolutely. I love engulfing candles. Yep. If you get a single candle that engulfs the previous 2 or 3 candles, if you're looking at the 1 minute, absolutely take it. Got to know where your stop is, though. So the most conservative 920 cross. Here's what it says. You wait for the cross. You get your cross to the upside, then your first green candle that closes, you put on the trade. And then that first red candle that closes once you breach the 9 to the downside on the 1 minute, that takes you out of the trade. But again, you could do that with the 2 minute also. You can execute on the 1 minute and say, okay, well, all right, we open the trade on the 1 minute, gives us a precision entry. And then use the 2 minute. Okay, well, we're still above. We haven't breached to the downside, but look what we're doing up here on the 2 minute. And then let's look at the 3 minute and see what it looks like on the 3 minute. Guess what? We're breaching on all of our time frames. Look at the 5 minute. See what the 5 minute looked like. Okay, see how it's doing this. And again, then you had this big 5 minute candle. But again, trust those higher time frames and trust your levels and trust what has happened before potentially happen again. Because your stop would literally technically under the breakout candle. Sometimes. So particularly, like for instance, on this play right here, if you took this play to the upside right here, you're getting in on this candle right in here. You get to cross to the upside, first green candle, and then you're going to stop out right in here, that first red candle that closes below the 9. Good winner. Golf candle found depending on the time of this second, third candle move, same color. I'll observe that. It doesn't scare me out of a trade. Instead, small pullback. Perfect. So is it Fibaro or Fibaro? I think it's Fibaro Gigolo. I don't think it's Fibaro. I don't think it's Fibaro. I think it's Fibaro. Fibaro. Not the Italian version that I'm trying to use. Fibaro. It's Fibaro. Okay. Gotcha. What's your first name, brother? Let's call you Figaro. See, that's what Figaro the cat. Figaro the cat. Yes. Cool song. Good song. Figaro. Gotcha. All right. Who else has a question? I'm not going to ban you. Why the hell would I ban you? No, like the other fake Jimmys? No, if you had a name like Jimmy D, I would bounce you immediately. Fake Jimmy. Hey, Mark, have a great weekend, my friend. I'll be watching the fights tonight, folks. Be watching the fights with my man, Raph Money. He's sitting over here right now. I think he's at the practice facility right now. We will be watching the fights tonight. That's some good ones. UFC, baby. So I'm interested in Dustin Poirier. He's one of my favorite fighters. He's the co-main. Fibonacci plays are very telling too. There's a great strat if you want to go in a one-on-one candle. Absolutely. So they are pay fights, but if you, Lionel, I can send you a link. How about I send you a link? I'll do that. Folks, there are so many really, really good strategies out there. The strategy doesn't matter. I'll send you the link too, brother. the strategy does not matter. Bro, hey, thanks, man. Have a good time. Are you playing? Are you playing hockey, or are you spectating? Yeah, love Poirier. I saw Poirier fight in Vegas in 2014, the first time. Oh, you're a promoter. Okay, cool. Well, say hi to all the boys. Hey boys. I'm a Minnesota hockey player there. So yeah, have a great day. The strategy doesn't matter, folks. I mean, you have to have a winning strategy. You have to have a winning strategy, but it is your ability to execute on your strategy. That is what makes the difference. So you can use, folks, you can use Fibonacci retracements. You can use Keltner channels. You can use 920. You can use support to whatever it is. Just execute according to your trading plan. Whatever your plan says, just do it. Put on the trade. Have a good one, Crash Dog. Ooh, nice, man. I'm playing tomorrow too. Playing a little money game tomorrow. Santos, have a good day, bub. Let's do this trading reinforcement again. We'll do it. We can do it every week, guys. We can literally do this every week. We can do this often. I can't do it every day. There's just no way I can do it. Is there another kind? No, there's really not. Yeah. Okay, so that's one thing, folks. Trade a single strategy. I'm a 920 trader, but I happen to use major zones. Okay. Trade one strategy. Don't try to incorporate 15 strategies into one, because what that'll do is that'll keep you out every single trade. Well, have a good one, playing no. Thank you, fourth quarter. I appreciate that. Boomer. And you got to trust yourself, Ruben. You got to trust. You had a great day on Friday. You had a really, really good day. Would be nice to get this getting based off our rules like Jimmy used for his chart. Is there a way to set those up? You can write your own script. When do you think the link will be available for the video? Where on Discord? I have no idea. Somebody's going to have to send me a link to it, and then I'll share it to my 920 trading page. So that's what we're going to do. But Genghis, you have access as a paying member. You can get the all-in-one indicator. Let me show you the indicators that are available to you. So let me see, invite-only scripts. So you have the A+, the all-in-one, and the double-cross. You can have those indicators. They're available. All-in-one, yes. As paying members, they're available to everybody in this group. I know it is, Rube. I know. So here they are. Take a picture of these folks. They are available. Just go to member indicators. They're all there. You'll have to have a WAP account, but they're all there. Trading View, that is correct. They're Trading View. I'm going to get you on Trading View one of these days, Genghis. We'll do it this year. We'll do it this year, brother. Okay, cool. Cool. Anybody else got any other questions? And if not, I'm gonna shut this thing down here in just a little bit. Yeah, if you just got charged $155, absolutely. That's hilarious, Crash Dog. That's hilarious. Now, the money game that I speak of, folks, it is a small stakes game. It is not, it's literally, it's $10 buy-in. We'll have 16 guys playing, so it's a cheap money game. It's $10 to buy in, and it's $1 for every 3-putt. So then it pays out skins, it pays out greenies on the par 3s, and there's a 1-putt pot, and we play poker for that. So for every 3-putt, it costs you $1, and for every 1-putt, you get a card. And the person with the best card wins the 1-putt pot. Can you just, if you are a smart person, okay. you go in this game. Raf, the problem with Raf is on the plus side of things. Okay, Raf is a former professional, played South American Tour, Hooters Tour, Hogan Tour. I mean, he's that good. But because he's on the plus side, it's incredibly difficult for him to win skins because he's giving up strokes to the field. The only way he really makes money is the one putt pot. And then he'll have like 13 one putts, and somebody with 5 invariably beats him. So it's kind of crazy. But if it's just a one-on-one, you throw a full port behind Raf every time. I'm through the third episode right now. Anybody got any more questions? Have a great weekend, Cash Money. Hang tough. Have a great one. And again, always thank you for the kind words, Hang Tough. I appreciate it. Everyone dies in the end. That's too bad. All right, folks. Well, I'm going to shut her down unless anybody has any more questions. And I'm sure Peter JW coming in hot. I'm sure I'll get that link to that live video here in just a little bit. You're welcome anytime. So, thank you, Land Pirate. So good. Folks, I'm always, I make myself available to members every single day. Every single day. We'll do a look back on TOS. I hate TOS, though, because I can't do this on TOS. I can't go like that. I can't do that on TOS, so I hate it. Thank you, Ruben. Thank you, Fortunate. So yeah, and that's what I like about TradingView is you can't see the future, but I can manipulate it a whole lot easier on my screen. But anyway, folks, I hope everybody had a great day. Hope everybody had a great last week. And I hope that there was some value in what we did today. That is what we're trying to do as a community, is to establish and create value. We want our value to be greater than the money you spend to be in here. So that's what we're doing, folks. Anyway, hope everybody has a great rest of the day. I'm going to jump out of here pretty quick. Have a good day. Have a great weekend. And again, every single day, folks, I talk to our members every single day. If anybody ever needs a one-on-one, feel free to hit me up. Seriously, feel free to hit me up. There are people in here right now in this group, notwithstanding Wrath. But I talk to these people 10 times a week, minimum. And there are people in this group right this very second. But anyway, send me a DM, and if you're having an issue, we can always get together. But anyway, hope everybody has a great rest of the day. We're going to be on the mic first thing Monday morning, 9 o'clock Eastern time. Have a great weekend, everybody, and we will see you guys later. Aloha.